This is the exact reason why stocks are rallying, and I do believe that we are going to continue to rally as long as inflation is downtrending. So as we see on our chart right here, inflation is down in a downtrend. It's a clear downtrend. Early in 2022, inflation was at an all-time high of 9.1%. Absolutely insane. A lot of people are panicking. That's especially a time when the market was having a huge pullback. A lot of people are pretty scared of the market. They wanted to take out cash because price of goods and everything was going up. So people needed more cash to buy goods. So that's why a lot of the stocks are down 40, 50, even 60%, especially the tech sector, which got hit pretty hard. But as we can see, 8.5 was in July 2022, and then 8.3, 8.2, and now 7.7. So this is a clear downtrend. It looks like inflation is finally cooling off, and it does look pretty promising for the stock market. We could probably see a nice rebound over the next few months here. So we're really excited about that because a lot of people have been bleeding in the market. A lot of people are losing a lot of money, and a lot of people are just losing faith in stocks in general. Back in 2021, the market was very, very healthy. A lot of people were very excited about stocks, and now it seems a lot of people have pretty much given up on stocks. But we're pretty excited for this good news. Seems like we're finally getting lower inflation rates, which is not very. It's not so good for the stock market, but it's good for consumers as well. A lot of goods and are just overpriced at the moment. So we're going to be taking a look at four stocks. As four stocks that I have bought personally in my Roth IRA. I do think there's a lot of potential for a huge run up because a lot of these tech stocks are down 40, 50, 60%, as we mentioned earlier. And the stocks that have the most potential to bounce back up are going to be these tech stocks that are down. So the first stock on our list that I bought is going to be Amazon. So I do have 100 shares in my Robinhood account right here, but I did buy more shares in my Roth IRA. And if you're not familiar with the Roth IRA, it is a retirement brokerage. You can contribute $6,000 in it per year. And the reason that there's a maximum contribution limit is because it's very powerful. You do not pay any gains, capital gains taxes on your stocks. So you can buy and sell stocks as many times as you want, and you will not have to pay taxes. Very, very powerful thing, especially for long term investors. The also downside to that account is you cannot withdraw your money until age 59 and a half. So a lot of people don't want to do that. They just want to pay the taxes and they're fine just investing in like a Robinhood brokerage account, so they can withdraw their money anytime. But yeah, Amazon, we bought Amazon in that account. Amazon did especially amazing, up 12% or plus $10 gain as of last Friday. And if you take a look, it's pretty insane. So Amazon hit lows of $86 per share. That would have been the ideal time to buy Amazon, of course. I do love Amazon as long as it's under $100 per share. If you take the 1 year, it's still down negative 45% in the past year, regardless of this 12% day. So that's pretty insane. There's still a lot of room for Amazon to the upside. Amazon is a solid company, very, very solid, huge tech giant. Honestly, we love Amazon. In particular, this 5 year, it is kind of back to where it was during the pandemic drop. So we really like how low Amazon is, and I do think it's a great time to buy Amazon. And if you don't want to buy Amazon, you could do Amazon options as well. You could sell cash secured puts if you head over to the options chain. This is just an example. You can go to the November 18th expiration, which is 1 week. And you can see premiums are looking pretty good. You can sell something like a $92 cash secured put, which is pretty safe. Honestly, owning more shares of Amazon at $92 per share is a pretty good cost basis, in my opinion. And you're going to receive a 1% premium for doing that. But next stock on our list is going to be Tesla. Tesla is a pretty solid stock as well. And as we can see, I did sell a cash secured put on Tesla for the $170 strike. That means if Tesla drops below $170 by our expiration, which is November 18th, then we have to buy 100 shares of Tesla at our strike price, which is $170 per share. And I'm totally fine with that. Tesla is a solid company. We're moving to electric vehicles in the future. Tesla's way ahead of the game. They have their supercharging network. But so I wouldn't mind owning more shares of Tesla at $170 each. So I did sell a put option here. But of course, as you mentioned earlier, I did buy a couple shares of Tesla in my Roth IRA. I think I bought like 5 shares. So I spent a few $100s on that. But as we can see, Tesla's down 43 in the past year. And overall, 5 year looking pretty good, honestly. But I do like Tesla, and this price point of 190 right here is probably one of its lowest you're going to see in a while. Um, so next stock is going to be Nvidia. Amazing day for Nvidia, 14% on the day. But if we take a look at the past year, down almost 46%. So it's getting actually absolutely killed just because of inflation, of the whole recession, everything. All the tech stocks are down quite a bit. So that means that there's so much room for growth, so much room for rebound for these stocks to go back to the upside. And Nvidia, very, very solid stock. As you can see, 5 year chart is pretty good as well. And I do think they they do pay a dividend. It's only 0.12%, pretty much nothing, but you will get a few cents, few dollars every single quarter if you do own a few of these shares. But Nvidia, very, very solid. I do think there's a lot of room for the upside. So definitely keep this one on your list. And then last but not least, we have Google up 7.5%. I do love, just like Amazon, I do love Google as long as it's below $100 per share. I think that there's a lot of room, a lot of potential for it to the upside. Google's a solid, huge tech giant, just like Amazon. And yeah, that's the platform we're using. Google owns YouTube. So Google, it's a good stock to own. I bought like 10 shares of my Roth IRA, so I do have a pretty small position, but I do have some shares of Google at the moment. But if you don't want to buy individual stocks, you could just go ahead and do QQQ, which is the Nasdaq. It's going to be a collection of all those tech stocks that are down. As we can see, it's down 28% the past year, and up 85% the past 5 years. So it is a very solid ETF. If you don't know which tech stocks to invest in, just choose QQQ. It has all the tech stocks in it. Very, very solid company. As we can see, has 103 holdings. So you're pretty diversified in the tech sector, but it is going to have a lot of potential for the upside, in my opinion. So you definitely want to keep your eyes on this if you don't know which companies to watch. So we also want to go over Meta Platforms, which is down one of the most out of all the tech stocks, down 66%. But it did have an insane run up. I did actually have call options on this stock at the 110 strike, so we made it $1,000 on that, which is pretty nice. But Meta Platforms, I think, has the most potential. It's the riskiest on this list, but it has most potential for the upside. As we can see, it's the only stock on our list that's down in the past 5 years. It's down 37% in the past 5 years. So that's absolutely insane. Meta Platforms, aka Facebook stock, is not doing well, but they do own almost 100 companies, and they're betting really hard on VR, the metaverse, and NFTs. So if you are into that, Meta Platforms could be a solid pick. But me personally, I'm not buying this stock. It's a little bit too risky. But if you do get lucky with the stock, you can make a ton of money. So that's about it for this video. Consider liking and subscribing. Comment down below what stocks you're buying. Thanks for watching.